For decades, the aerospace industry operated under a simple, expensive law. You build a rocket, you launch it once, and you throw it into the ocean. Space was a playground reserved exclusively for superpower governments with infinite taxpayer money. Then came SpaceX. Founded in 2002 by Elon Musk with the radical, widely mocked goal of colonizing Mars, the company did something the giants said was physically and financially impossible. They made rockets reusable. By landing and reflying the first stage of the Falcon 9 rocket, SpaceX didn't just win contracts. They broke the core economics of spaceflight. To understand how completely they dominate, look at the launch metrics. Today, the company is no longer just a private launch contractor for NASA. As of May 2026, following its historic S-1 filing to go public under the ticker SBCX, SpaceX is seeking a staggering $1.75 trillion valuation. This isn't just about rockets. It's about the massive financial machine funding the future of humanity. How do you justify a $1 trillion valuation for a rocket company? The answer is simple. SpaceX isn't just a rocket company. It's a global telecommunications titan. Meet Starlink. According to the newly disclosed 2025 audited financial data, SpaceX brought in $18.7 billion in total revenue. But look under the hood. Nearly 70% of that money didn't come from launching astronauts or cargo. It came from satellite internet subscriptions. Operating out of a prolific facility in Redmond, Washington, SpaceX is churning out an average of 70 Starlink satellites every single week. This unprecedented assembly line has allowed them to seed low Earth orbit with over 9,600 active satellites, serving more than 10 million global subscribers. While the traditional launch segment carries heavy contract dependencies, Starlink is a recurring revenue beast. In 2025, the connectivity segment alone generated $4.4 billion in operating profit. It is the absolute engine of the company, acting as a massive cash printer that subsidizes everything else SpaceX builds. But if Starlink makes so much money, why did SpaceX report a net loss of $4.9 billion in its public filing? Because Elon Musk is pouring every available dollar into two incredibly capital-intensive bets: Starship and a massive new investment in artificial intelligence. First, there's Starship, the largest, most powerful flying object ever built by humans. Starship is fully reusable, designed to carry 100 tons of cargo to space at a fraction of today's cost. But building a steel skyscraper that can survive re-entry requires billions in raw research and development. But the real financial shockwave came in February 2026, when SpaceX officially folded in Musk's artificial intelligence startup, xAI, the creators of Grok and the data assets of the X platform. This single merger completely rewrote the SpaceX investment thesis. Public investors are no longer just backing rockets. They are underwriting massive AI infrastructure. In the first quarter of 2026 alone, SpaceX burned $10.1 billion in capital expenditures, with an astronomical $7.72 billion of that dedicated strictly to AI data centers and computing power. The AI segment alone bled $6.35 billion last year. This brings us to the ultimate climax of the SpaceX story: the June 2026 initial public offering. Trading under the ticker SBCX, this historic event is looking to raise up to $75 billion from the public markets. If the pricing holds, SpaceX will instantly become the largest venture-backed IPO in financial history, commanding a valuation that rivals tech monopolies like Alphabet or Amazon. It will unlock generational liquidity for early employees and venture funds who took a bet on Musk when the company was worth less than $1 billion. But retail investors need to tread carefully. This isn't a normal stock. Through a specialized super voting share class, Elon Musk retains 85.1% of the total voting control. Public shareholders will have virtually zero say in governance. If Musk wants to divert Starlink's profits to build a colony on Mars or buy more AI supercomputers, shareholders cannot stop him. SpaceX has built a perfect closed-loop ecosystem. Starlink's internet profits fund the heavy R&D of Starship. Starship slashes the cost of launching more satellites, which scale the internet profits further, all while space-based data centers fuel the XAI brain. Whether you view it as a reckless cash-burning machine or the most vital engineering enterprise of our century, one thing is certain. When SpaceX begins trading, the race to commercialize the cosmos will never be the same again.